Big announcement today out of the Bank of Canada. This morning, the benchmark interest rate rose by 1 full percent. That's the biggest one-time increase since 1998.
Now, the implications of these increases vary, but since we're a real estate channel, today we want to talk about how these rate hikes and future rate hikes will affect the real estate market and, more importantly, homeowners across Canada.
Now, first and foremost, we need to understand what the immediate implications of this increase are. For buyers looking to qualify for financing, money is now more expensive, meaning you're going to qualify for less. This will also present the first time since interest rates were slashed at the beginning of the pandemic that you will need to qualify for variable rate mortgages at a rate of above 5.25%. Now, the decrease in buying power will directly translate to a decrease in sales prices across the board. This will take time to come into play, but we'll continue to see a decrease in sales prices during the summer months as a result of today's announcement.
Now, if you're a homeowner and you're worried about the value of your house going down, you probably don't need to, and here's why. According to the Toronto Real Estate Board, prices are up nearly 26% from February of 2020. Meaning if you've been in your home since before the pandemic, you probably have a very comfortable cushion of equity still at your disposal. On top of that, if you're coming up to the end of your mortgage term and you need to renew, you at least have the flexibility of extending your amortization, giving you the ability to disperse your payments over a longer period of time, making them less expensive. All of that is to say, while we did see record sales from 2020 to 2022, the majority of Canadians didn't move during that period of time, and because of that, they're going to be much more resilient to these rate increases.
Now, for anybody who did move during that time or pulled equity out of their home in the form of a line of credit, you will be feeling these increases more. If you're holding a variable rate product, your payments will be going up effective immediately. As a reference point, for every $100,000 worth of financing, the new variable rate mortgage will increase your payments by approximately $50 per month. There have been reports that since the start of the pandemic, consumers that elected to go with a variable rate mortgage neared almost 50%. As for how many of those have switched now into a fixed rate, well, we don't know, but those who are still in variable rates will be affected immediately.
It's also important to note that likely the most affected group of people will be first-time buyers who bought in the last 2 years. The reason why is because these buyers were buying at inflated prices, meaning that their loan amounts are higher. And because they're first-time buyers, typically they're buying with small down payments, which means their equity would have been eroded very quickly. Based on conversations that we've had with our mortgage partners, we also saw an increase in co-signers on mortgages. And this could further add to buyers not being able to afford their payments as a result of these increases in rates.
The other group to look out for is people who pulled equity out of their principal residence to buy an investment property that didn't cash flow. In that case, you're fully leveraged on your purchase, and if you're on a variable rate and cash flow negative, this could hurt for a while.
As to how long and how high interest rates are going to go, we don't know the answer, but we do want to leave you with one piece of advice. This is going to be loud. And what I mean by that is we're going to see this posted on headlines, on news sites, and social media as people try to sensationalize this increase, kind of like what we did with the title of this video. But the actual effect that this could have on you could be a lot less than you might think. So before you go immediately to panicking because you clicked on an article or watch a scary YouTube video, make sure you confer with a trusted professional who has your best interests at heart.
And of course, subscribe to our channel for more up-to-date content on the real estate market.
If you have any questions, post them down below, and thank you for sticking around to the end.